Hey everybody, welcome back. It's James here with Crypto Common Sense, and I have your Bitcoin / cryptocurrency update for Monday, July the 6th. Before I jump into the content for this video, please do me a huge favor, hit that thumbs up button. Also, make sure you subscribe to the channel, make sure you leave a comment, and make sure you check the description for a link where you can join the Patron. Not only support the channel, but also get more frequent updates. So it's been a couple of days since I've really taken a look at any charts. I was away for the holiday weekend, and when I sat down today I was a little surprised to see Bitcoin hovering up around $9,300 or so. So let's talk about what happened. Let's talk about how Bitcoin got there. We'll take a quick peek at the stock market and some of the other markets toward the end of the video, and kind of try to wrap this thing up in a nice little bow. So first things first, I'm going to actually start on a very zoomed out time frame. I'm going to start on a monthly time frame. And what we're looking at here is a monthly chart for Bitcoin. Obviously, this is Coinbase, goes back to 2015. And it really is starting to feel like this is some type of range that we're stuck in on this larger time frame. And so if we draw a parallel channel from the close to the close down here, we get something that looks like this. And we could draw this a few different ways. We could use the tails or whatnot. I'm just going to use the low close. And almost looks like some type of range here where we're just ranging between those 2 points. That is entirely possible. I tend to believe that the stock market has tied itself, the Bitcoin has tied itself to the stock market. And because the stock market moves slower, it certainly feels like Bitcoin is now moving at that slower pace as well, which is a major disappointment, because one of the attractive parts of cryptocurrency was the fact that you had a lot more volatility and you had a lot more trade opportunities because of that. But those seem to have disappeared, at least in the smaller time frames, right? And when I say trade opportunities, I'm talking about swing trades, position trades, and things of that sort. Obviously, day trades are still there and smaller moves are still there. But the larger moves, they seem to have vanished for the most part over the last couple of weeks or months. So do keep in mind that it's very possible that we are inside this range, and if so, this mid-level here could act as support and or resistance, right? You saw it act as resistance right here and support right here, so it could be that this thing wants to move up toward the top of this range. Again, it's a monthly chart. I'm not saying that's going to happen, just saying that keep it in mind as one possibility. If we take a look at the weekly chart, we did have a weekly close a little over 24 hours ago. And unfortunately, that weekly close didn't tell me squat, okay? This red line here is our resistance line. This is dating back to 2017's peak. And it's basically the resistance that we tested back in the first part of June. And then we kind of established ourselves to be in what looked like a potential downtrend, or looked like it might be shifting into a downtrend. But that's not really the case. We had these 4 red weeks in a row. But if you look, it did not take out the previous low, okay? So this candle here actually closed at 96.76. This candle closed at 97.50. So obviously this was a higher high, and this here so far looks to be a higher low, right? Your old low is right here, and that's definitely above it. And this week is starting off strong. So, if this week can take off and close above this level back here, it's really just going to be a continuation of an uptrend, okay? It's a little too soon to call that right now, but this is certainly a little bit concerning if you are a bear, okay? If you are looking at RSI, the story's a little bit different. Again, not real fond of all of these lines. I feel like we really need to break out so that we can stop using the same old lines. They've been used again and again, and I don't really trust any of these lines for the most part. But technically, we do have this red line of resistance that started back in July of 2019. We had a second touch here, a third touch here, and so it could be that this is a line of resistance. I'm not personally looking to take any trades based off of that. I'm just watching it. It snuck back up outside of this bear market box. Of course, the week is just now starting, so it could easily tuck back down inside of it and close inside of it. So we'll have to keep an eye on that. But yeah, this weekly chart doesn't do anything for us, or doesn't do anything for me at least, right? It seems to be stuck in the same range that it's been stuck in now for over a month, right? We've got the bottom of the range sitting down around 8,700 on the weekly. top of the range sitting up around 97.50 or so, and it's just moving sideways between those 2 points. More of the same story. If we jump down to the 3-day chart, step down a bit, we can take a look at this 3-day chart, and if we do, obviously we were in a bit of a downtrend here. We had a lower high, a lower low, a lower high, a lower low. Then it suddenly put in a higher high, but then turn around and put in a lower low again, lower high, right? So this is a muddled mess, and it's really just more of the same. It's ranging. I had done a video last week saying that I thought it might want to go down and test the bottom of the range, and then we'd have to see whether it broke through or what happened there. It did not break through. It found support, and it bounced off of it. Okay. If you look down on this 3-day chart, I think the range is probably going to look something like that on the 3-day. And if you look, it came down. I shot the video after this candle. It was somewhere in here, I think it was. And I said, that I'd be watching for it to get down to around, 88.50 or so. In reality, it got down to 89.05. So, not quite 88.50. And now it's starting to move back up. But if we do draw this as a parallel channel, then what we will see, if I can get the thing on there, is that we're just now coming up right to the center of it, and this could be acting as resistance here. Okay. Again, not really giving me a whole lot to go off of. This specific candle that we're in right now on the 3-day chart, it has about 23 hours left in it. So I'll try to watch and see where it closes at, see if it gives me any clues. But so far, this is just a muddled mess. All right. If we start trying to draw some type of trend lines, obviously this trend line looks something like this, right? Was ignored back here. Looks almost like support through here. If we pull it up like this, we get something that looks like this, or pretty close to that, something like this. Looks like resistance again, so we're pretty far away from that, so the line doesn't do a whole lot for me. If we start drawing lines like this, I said we could have a falling wedge. Then we have to see if it broke out of the bottom of it. It did not break out of the bottom of it. Try to get this a little more like this. In fact, what it did was it bounced off of it back here in late June, and then it bounced off of it again right here on July 2nd. So we're still in this same, tightening formation that we've been in. And really, as much as it sucks to say it, we're still in this waiting game. Just waiting. Is this top line going to break first, or is this bottom line going to break first? If it breaks here, I expect more upside. If it breaks here, I expect lots more downside. Okay? But yeah, right now, just more waiting, right? Just ranging. And I know it's boring. It's also very easy to get complacent when things are ranging. You don't want to get complacent because when the move happens, it's probably going to be a doozy, right? We've now been in the same range for about 114 days, going on 4 long months, which is, well, I say range, excuse me. We've now been in this move, right? Move up and moving sideways for about 4 months, which is unusual for Bitcoin. It usually corrects. Usually you move up a couple of months and then you get some type of correction in a bull market. Of course, in a bear market, you usually have shorter rallies and then, more of a drop or more of a crash. But even in a bull market, normally you move up a few months and then correct. Move up a few months, then correct, and so on and so forth. So is this a correction? Is this going to be a correction? Maybe, maybe not. I want to wait and see what happens here. I still lean toward this being distribution. Okay. If we jump down another time frame, I'm going to jump down to the daily here, and same thing. This was the 2 lines I was watching. Obviously, I talked a few weeks ago about this being price was down here. I said we might get a bearish retest. We did. It dropped. We got a bearish retest here. Again, it dropped. But now you've got to be careful being a bear here because this bearish retest did drop, but then it came right back up and broke through that line of resistance, and we're right back inside this same silly range that we were moving in, for this week or two back here. So not a whole lot of fun. Also, if I look at this, I want to go back to the 3-day chart real quick. If I put this on a line chart, this does look like a double bottom right here. You have this move down, and you do have a fairly textbook double bottom pattern there, and also one over here. Okay, so those do lean to the bullish side, right? Put this back in a candlestick chart. Same thing on a daily. If I put this on a candlestick, a line chart, it's going to be fairly easy to see. It does look like it's trying to put in some type of bottoming out formation down here. Whether that's the case or not remains to be seen. But again, breaking through resistance like that is typically not what you want to see if you are a bear. Okay, maybe, big maybe, it's wanting to come up and fill in this liquidity gap it created here. I'm not a big fan of these types of gaps right here because it's a BART pattern, right? Now, if this had just happened out of nowhere, like it did back here, I'd say, okay, yeah, it's probably going to fill that in. But really, to me, this right here, this red candle, was just filling in this green candle's gap, right? Gapped up and then filled the gap. So I'm not usually a big fan of saying, oh, let's go fill in this gap, right? We'll see. All right. If we're taking a look at trends, same thing. I don't really see a trend on this. I just see a ranging market, and that's all I see for right now. If we're looking at RSI, same deal. I really do not see a trend. What I can say is that RSI is obviously on a downward trajectory. It's just getting lower highs and lower highs and lower highs. Obviously back here, has a muddled mess, but overall you can see the general direction is down, right? So it could be this ends up being, something like this, where it's like a wedge or a falling wedge, which again is a bullish pattern. Even though it's going down, it's actually bullish, right? So I will be watching that, but unfortunately, still no clear signs here. And I still have the same levels that I've been watching for, over a month, since May, right? Ever since this thing shot up back here and got squirrely, we still have this liquidity gap that's sitting down around $7,800. We still have this liquidity gap that's sitting down around $5,400, $5,500. We still haven't retested our 50 fib or our 61.8 golden pocket on this move, right? We look, 50 would be 71.43. Golden pocket's down around 6,100 to 6,300-ish, right? Haven't tested either one of those. We haven't went down and tested our 200-day moving average. We did test the 50 moving average through here. It failed, and it looks like right now, so far today, I didn't realize this before I started shooting the video, but it looks like we have come up to retest that. So that's a level that I want to watch. Are we going to break above that and head north? Or was this just a retest of that, a bearish retest where we get further downside? I'm 50-50. It's really tough to call at this point. There's just so many things that have left open and untested. I find it very hard to believe that this is going to just continue moving up from here. Now, again, anything is possible, right? And a lot of it's going to depend on what happens with the economy, what happens with the stock market and all that kind of stuff. Because like I've said many, many times, I believe this thing is heavily correlated to stocks. So if they start pumping out more cash and printing more cash and handing money out like it's going out of style, and they keep falsely inflating the stock market, then yeah, maybe Bitcoin gets to ride on that thing's coattails. If they can't inflate the stock market and it finally, comes to terms with reality, then of course I think Bitcoin's going to do the same thing. Okay, so I know it's what nobody's looking forward to hearing me say more waiting, but yeah, we're kind of in this game of more waiting right now. If we look at precious metals like gold, I don't talk about gold on this channel a whole lot, but if we do take a look at gold, gold is showing some signs of topping out. Now, I'm not talking about trading gold here. I'm just talking about understanding where gold is at so that you can kind of look at markets as a whole. But if we look at gold, gold did come up and retest its old highs from 2012. It had a really strong run here. It definitely looks like it's due for some type of correction. Obviously, this is probably fueled by fear more than anything else. It's a pretty steep incline. And it looks to me like when I go down and I look at the RSI, this actually looks like it's forming what's called a megaphone pattern, which again is a bearish pattern. So it does look like, this thing could be cooling off some. If I draw some fibs up, it puts that 61.8 down around $1,400, which is down pretty close to these old highs back here, right? Not all-time highs, but these highs through here, which would be a logical place of support. So now that being said, I did buy some gold this week, which was like a cost averaging deal. It's not, let me make it very clear, it's not to trade. It's not a short-term buy. It's something I'm planning on holding for 20 or 30 years. So, I bought it with the understanding that I'm probably going to be underwater in the short term, right? But yeah, gold looks like it's kind of toppy. If we go over and look at the US 30, which of course is the Dow Jones chart, if we take a look at it, we did have this really clear line. It's a nice little uptrend going. Had some nice support here, broke underneath it. I was looking for some type of bearish retest, but it broke through it. So that's a little bit weird. Obviously, it was in this range, fell through that range, came right back up, and now it's back through the top. So again, this thing is acting very squirrely, and I just feel like Bitcoin is just following its lead, right? Really, that's what I think is happening. We had the 200 moving average. It came down underneath it, came back up for the bearish retest, bounced down. Would have been a good place for somebody to take a look at possibly going short. And now we came up to retest it yesterday, stopped right at it, and then today, suddenly, we're peaking above it with about almost 20 hours left in the trading day on this thing. So I'll keep a close eye on it, but same thing. It's not trending. It's not trending up or trending down. It is also just ranging, right? Boring. Okay. But we'll see. Slap a 50 on there real quick and see what we got. So our 50 is way down here. Almost looks like it found support when you really look at it. And the 200's up here. So this is a death cross back here. And just like with crypto, which is hilarious, death crosses are typically bearish signals. That means that price should, in theory, move down. But in crypto last year, bear crosses have actually done the opposite, and they've actually moved up every time. And it looks like the stock market has now also lost touch with reality. And so even though you had a 200 moving average curling down and a 50 moving average curling down, a true death cross, in reality, that marked almost exactly the bottom. This actually crossed the day before the bottom back in March. So, all this looks completely irrational. All this looks to me like the same thing it's looked all along, which is just a giant case of complacency. But number one, we'll wait and see. And number two, if it is complacency, this is the stock market and it tends to move a lot slower, right? But when you put it on a monthly chart, you do get a very different feeling for this thing. This goes back to 2015, and you can see that, we're not anywhere near this high back here. So this very well could be A, B, and then a C leg to come, okay? It could alternatively be something more like this, where you moved up, got too far too fast, came down a correction, tagged this old level of resistance, flip support, and now it's going to move off of it and take out this old high. That's completely possible. Here's what I see when I look at this though. If I wait until it takes out this old high and confirms a new uptrend, that's about a 10% or so move that I'm going to miss. But if I try to chase this thing and FOMO in up here and I'm wrong or right, depending on how you look at it, and it takes out this low, that's a much bigger drop, right? So that's why rather than trying to take some type of positional trade, I'd rather just stick to the smaller time frames and stick to the intraday time frames until there's a clear trend established. Depending on who you follow as a trader, which of the quote unquote gurus or whatever you follow, there's lots of traders over the last 100 years or so that have established themselves as experts in the field. But some of the rules out there include if you don't understand, if there's not a trend, if you don't know the trend, don't trade. I believe the actual saying goes something like, "If when in doubt, stay out," right? So I don't believe this is trending. I believe that on the smaller time frames it's ranging, and I believe that we're waiting to see what unfolds. So for me, I'm just not gonna get in there. Like I said, I did buy some gold a few days ago, like some actual gold to hang on to long term, and I do have a little bit of silver, like silver ETFs and things for long-term investments. And then of course I have my small hedge fund with crypto that I've talked about many times, where I do hold some cryptocurrency that I don't sell, that I don't trade, just in case there is hyperinflation and cash somehow falls apart, right? And someone had actually asked the other day in my Facebook group or commented or asked or something, why am I only keeping a small percentage of my net worth in, like precious metals, for example? they said, it's going to have to go up 20 or 30 times, to offset your cash losses if cash loses its value. And, the answer to that is I'm not trying to, account for all losses I'm going to take if cash gets hyperinflated. I'm just, trying to make sure that I have a safety egg. And if cash gets completely inflated, I still want to be able to eat. I still want to be able to have a roof over my head, et cetera, et cetera. But no, I don't feel like there's a good way that I can guarantee that, I'm safe no matter what. So instead, I just take small, put a small percentage of my net worth in crypto, put a small percentage of my net worth in gold, put a small percentage of my net worth in silver, and then also have, a lot of my net worth liquid, so that if markets do crash, whether it's real estate, whether it's precious metals, whether it's crypto, whether it's stock, that I have that, as they say, dry powder to jump on those deals. Because the reality is, in recessions, you often find the greatest opportunities if you position yourself correctly. So no, I'm not worried about missing out on 5 or 10 or 15% gains when I'm trying to play a bigger game where I'm looking for those 50, 100, 200, 300% gains. All right. But overall, unfortunately, it does look like this week has left us in the same place that these last several weeks have left us, and that's stuck in a range and waiting for this thing to break either one direction or the other. So with all that being said, guys, I'm going to go ahead and wrap this video up there. Please do remember that I am just some guy sitting in a spare bedroom. Nothing in the video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence and seek out professional investment advice from a licensed financial advisor, which I am not, before making any type of investment in cryptocurrency, the stock market, or real estate. Of course, if you enjoyed the video, please make sure and give it a thumbs up. Make sure you subscribe to the channel. Make sure you leave me a comment, and make sure to check the description for a link where you can join the Patron to support the channel and also get access to more frequent updates. This is James with Crypto Common Sense, reminding you to please trade safe.